So, you guys know by now that I'm not a really big fan of technical analysis of any sort. But based on Adam Khoo's recent crystal ball, it seems like the Hang Seng Index has finally broke out of its 200 moving average. And does this hint of the new Chinese bull market in 2023? Time will tell. So I usually tend to ignore the day-to-day price fluctuations of the stock prices as well. But I think there seemed to be a notable change in tonality towards many of these Chinese tech stocks in 2023. And the markets are currently trying to price in this new reality moving forward. So let's first talk about what was the catalyst that essentially pushed up Alibaba's valuation today. So in short, Alibaba's Ant Group seemed to have received some sort of blessing or approval from the Chinese banking regulators. So I've read the article published on the Straits Times, and this was the conclusion that I essentially arrived at. So there was not much concrete details that was published as to how big of an approval this was for Ant Group in the grander scheme of things. Yes, they did say the approval was from 8 billion to 18 billion. And Ant has also finally achieved some sort of approval that was required by the government after a 2-year-long ordeal. But they are currently still waiting for a financial holding license, which will subject them to the scrutiny functioning like a bank rather than a tech company. So to me, this is still pretty sentiments based. So you know what else is sentiments based? The like button, of course. So it tells people how much you enjoy watching my content, or at least my form of copium for Alibaba stock. So don't forget to smash on it if you like what I'm doing. Now, Ant Group's fundamentals, if you were to compare before the crackdown, is clearly impaired for the long term. So because they will no longer be able to operate like they used to before, just like my legs, which is a high margin and highly leveraged business, albeit being unsustainable. Thankfully though, Ant did not IPO back in August of 2020 at a valuation of, if I'm not wrong, 300 billion US dollars then. If not, there would probably be a class action lawsuit against Alibaba with the whole narrative of China trying to siphon money from American investors all over again. So at least the government was sensible enough to shut it down early before things went out of control. So this then begs the question, was this rally even justified? So I think the answer is pretty grayish, yes and no. No, because fundamentally, the business, which is Alibaba as a company, wasn't really affected much. So with or without this approval from the Chinese government, Alibaba is still leading in e-commerce, leading in delivery, leading in cloud, and leading in digital payment. So what exactly changed? That said, with more and more of such announcements coming out straight from Beijing, such as sending strong signals to support big tech companies, and Chairman Xi himself said that he's asking many of these tech companies to play a full role in leading economic growth, to the approval of many of these gaming titles for both Tencent and NetEase after an 8-month freeze, to now even a potential speculation of Ant Group going IPO again. So investors seems to be hopeful and optimistic. So it definitely doesn't help when you see many of these headlines on mainstream media platforms. Investments are set to flow back to China as tech giants avoid US delisting, CNBC. China tech stocks are winning back investors after an awful year. China stocks are a buy on reopening, top money managers say, Bloomberg. So when you see many of these sort of headlines, you probably want to start being cautious again, because the media is definitely trying to sell you a particular narrative. New year, new sign-up rewards. So Weeble's new welcome deal for the start of 2023 has never been better. So you can get up to 150 US dollar trading vouchers if you fund and trade your Weeble account today. So all you have to do is to sign up for a new account with the link below and deposit at least 2,000 Singapore dollars and execute one buy trade on a stock or ETF and one mutual fund, coupled with buying one option, and you will get to enjoy a whopping 10.5% return on initial capital. So for those of you who are still considering sitting on the sidelines, I don't know what's holding you back. So when the markets are slowly selling down and S&P 500 just keep grinding downwards, I think it's a good opportunity to start dollar cost averaging into the markets. And you can even get an additional 150 US dollars to do so. So Weeble prides itself on zero commission trading, and you can stop paying all the redundant commissions and use it to buy more shares. So recently, they've also allowed for a zero fee subscription and redemption of mutual funds on their platform. So don't let this opportunity slip away so easily. Link to sign up is in the description box down below. Thank you Weeble for sponsoring this video. Personally, however, I still think that many of these Chinese tech names are considered undervalued. But would I be FOMOing into many of these stocks now? FOMO, which means fear of missing out? Probably not. So the real reason is because even if I wish to FOMO, I kinda ran out of money. Lol. So on a more serious note, however, the better time to accumulate was when everyone essentially gave up on the stock and said that everything here was uninvestable and they just threw in the towel, and not when everyone starts to turn positive like now. So for now, I'll be pivoting my strategy a little. I think I have accumulated my Chinese position to a level that I'm currently extremely satisfied with. So I'll stop adding to my Chinese position for now, and that also includes stopping my monthly dollar cost average into KWEB ETF. So I'll be shoring up much more dry powder on the side so that I can buy the dips on other companies. But for now, I'm not very interested to buy any more of these Chinese tech names. So if it rallies from here, good for me. I think I have sufficient exposure. If it collapses from here, unless it goes below its all-time lows, it probably wouldn't interest me enough. Do leave in the comment section down below on what your game plan is in 2023. Will you be buying your way up? So for many commentators on the site saying that it was stupid of me to catch the falling knife, I would just like to check in with you guys again. So were you guys ever long on any of these Chinese names? Or were you just waiting for a trend reversal after trend reversal? Are these developments now around Chinese tech good enough for you to take a long position? Or will you still be waiting on the sidelines because insert reason here? So there is always 1,001 reasons to stay out of the market. Sure, you wouldn't lose because you kept your money in cash, but you'll probably never enjoy the upside as well. So I sincerely hope that your strategy worked out for you. So on a side note, not trying to be a party pooper of any sort, but not everything is rainbows and unicorns in China today. So just recently, Futu and Tiger experienced the wrath of the Chinese government again because they were allegedly conducting some unlawful business practices back in mainland China by soliciting many of these monies and help transfer wealth out of China. So despite all the quote-unquote good news coming out of China, there is always this concern about government interference and government regulation. So what's stopping Alibaba and Tencent to be next on the chopping block? Again, nothing. So keep that in mind. So I did call for the Chinese tech bottom back in November of 2022, and it seems like things are slowly playing out as I've expected. So 2 months is too short of a time frame, but for those of you who have diamond-handed and even bought throughout the dip, I think you should give yourself a pat on the back. So for now, let's just wait for the markets to do its thing. With that, I'll see you in the next video, but more importantly, I will finally see you on the moon. Goodbye!